Good Monday morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show. Before we get started, please take a look at the shared screen and the disclaimer, and be aware that Market Chameleon, Dimitri, and myself are not registered investment advisors or broker dealers. If you are searching for investment advice, please reach out to a registered representative. This show is for informational purposes only concerning Market Chameleon tools and products. With that, D, you ready to go?
Yep. Good morning, everyone. And I'm going to share my screen here so you can see the Market Chameleon. And quick note to anyone joining us for the first time, Will and I, we do these shows in the morning to try to help answer questions you may have about the Market Chameleon tools, the data, or the analytics. If you have a question, type it into that live chat on YouTube. Will's keep an eye on it, and he'll read it back to me. And to give you a couple minutes to put in questions, we're going to start out looking at our pre-market report to see if we could get insights, what's going on in pre-market hours, and then we will move on to our questions. And also a reminder, tomorrow we're going to do a webinar at 2 p.m. Eastern with Interactive Brokers. You have to register with Interactive Brokers, and we're going to be going over different ways to analyze single leg trades. And there will be a new report published, one you haven't seen yet on the website. We're gonna get it out tonight, so it'll be available tomorrow. And then what we'll do is in that webinar cover that new report. And it will be different analytics and different perspectives, different angles that we could look at single leg call and option trades, and what type of insights we could get if we could analyze them to figure out what people may be doing, how it's impacting the markets, if there are any type of opportunities. So that is going to be tomorrow, 2 p.m. Eastern.
Yep, and I put that link in the chat. You have to register on IBKR's website, and they control the video. So even if you can't go to it, if you register, they'll let you know how to see the video or the webinar afterwards. So register on that with that link.
Yep. Thanks, folks. So let's take a look at our pre-market report. And up here, you see this calendar view, and you have summary statistics of what happened in the pre-market trading for that particular date. And the idea there is you could compare today's pre-market activity, which is right here, May 13th, to what's been happening in the most recent days. Also, we could eyeball and see if there's any type of trend, if there are more up days and down days and so forth. But let's focus on today, May 13th. Over here, we have 503 stocks trading higher in the pre-market, 250 stocks lower. We have 103 million shares trading on up volume, 31 million on down volume. And if we convert that volume to dollar value, we have $2.4 billion worth of stock trading higher, $367 million worth of stock trading lower. So from that perspective, it looks like we have a bullish lean in pre-market trading. Let's look at it from a couple more perspectives, then we'll move on to our questions. And let me scroll down here. And now we get this granular view. We see the stock symbols, prices, price changes, and volume in the pre-market hours. We have our most active list, our biggest percentage gainers in pre-market, biggest percentage decliners. And here we see 84 stocks made our biggest percentage gainers list, 17 on our biggest decliners. And from that perspective, looks like that the trading in pre-market has a bullish bias as well. Now, to make it onto this list, we set thresholds because stocks in the pre-market can trade with low volume, low liquidity. If it meets our thresholds, it will make it onto this list, and that will include stocks that are low cap stocks. We have the market caps right here. It could be an ETF. It could be a leveraged ETF. It could be an inverse ETF, a closed-end fund. So to narrow down this group of stocks further, we could use the filters above. Now, if you have a watch list and you created a watch list because you want to focus on a certain group of stocks, you can filter out this report with your watch list. We're going to use the filter over here in ETF in our example. So when you click on it, you get this drop-down menu to select from. These are different ETFs. And when we choose an ETF, let's go with SPY over here. The list below will get filtered by stocks that are holdings in the SPY ETF. So let me see. I think I had this. Let me refresh my screen. I think I had it open too long on one page. Let's do that again. I'm going to click on SPY. And now the list below, you could see got filtered. And now what we did was narrow down the group of stocks that we're analyzing to the S&P 500 stocks. Right, that's the SPY ETF. And here we got 7 stocks that made it onto our percentage gainers list, 4 on our biggest decliners list. So that also points to a slightly more bullish lean. I would say this is a mixed bag. We looked at it from 3 different perspectives. I think they all point to a similar, slightly more bullish bias in the pre-market sentiment. All right. And we gave it a couple minutes. Well, I'll take some questions now if you haven't.
Nothing's popped in yet, D.
Okay. Then before we, what I'll do is just kind of mention some of the things, because tomorrow we're going to talk about the single leg trades, and I'm going to come here to this report, options volume. And tomorrow we're going to talk in more detail, more depth about analyzing these option trades. But just to look at today, this is Friday. We're not open yet, so this is Friday's report. And this gives us a breakdown of stock symbols, their option volume. And here you can see NVIDIA was the top traded stock security for option volume. If we look at option volume by notional value or dollar traded value. So Friday, NVIDIA traded $1.79 billion worth of options versus its 30 daily average of 2.62 billion. We used the last 90 days. So you could see that's below where, it's average. Here's a breakdown, the call and the put. A lot more dollar value in the calls traded than the puts, 1.29 billion versus 500 million. And this is the breakdown of the single leg trades versus multi-leg. And the difference is that a multi-leg trade is entered in as a more than one. It could be a call spread, a put spread, a time spread, a butterfly. When you enter in an order, you could enter it in as a multi-leg trade because you're trying to execute a certain strategy. And if you enter it in that way, as that each leg has to get executed simultaneously, you're not trying to leg into a strategy, you're executing more than one different contract at the same time, that would be a multi-leg trade. So we could see here the breakdown. And then there's the contingent trades, which are also multi-leg but have a stock component to it, okay, or have another contingency to it. So the 83% of the volume were single leg trades in NVIDIA, which are either a call or a put that traded and entered in as an order of a single leg trade. Okay. And then we're going to tomorrow discuss this in more detail, the breakdown of that. And here you have a little bit of, well, these are just the calls and the puts. If you wanted to, for example, see this report in contracts, number of contracts instead of dollar notional, just switch it here. Contract volume, then you could see the volume, the number of contracts that traded instead of the dollar value. Okay, and there's a difference because you could have a call contract that is $5, or you could have a call contract that's 5 pennies. So so the volume is the number of contracts. The dollar value is the total amount paid for those contracts. Okay, and if you wanted to toggle, you could do it up here this way.
D, we are on a little bit of a delay, but a couple questions have come in.
Okay.
Tiffany's asking, and more than Tiffany, I don't think she's been on before. Does higher volume and implied volatility generally positively correlated? They're asking.
So I think there's higher volume in the options and
implied volatility generally positively correlated.
Well, it's not necessary. It doesn't necessarily have to be, but it can be, but it doesn't have to. You could have high volume. What is volume? Volume is the amount of contracts that traded, and it depends on how these contracts are traded. It's a good question because that's one of the things we're going to be trying to figure out tomorrow. We're going to look at the volume and how the options were impacted. So I like the question because it will be something that we're going to look at tomorrow, and how do we decide that? But does it have to be? It depends on how the order flow, what the order flow is doing. If you have a lot of volume, let's say a lot of contracts traded, but if it's just one spread that was Vega neutral, or one spread that wasn't necessarily going in and pushing implied vols up, then it might not impact the implied volatility at all. If it was one incoming order that was a sell order, could make the implied volatility go down. So you could have a really big volume if you have a big trade, or a lot of traders who are selling premium, right? Because they think that the premium is high, or they think the implied volatility and the volatility of the stock will come in over time. They could be premium sellers. A lot of people sell buy rights, for example, and you could have a surge in volume if all of a sudden you have a lot of people buy writing, and that could depress implied volatility and bring it down.
You could have an event that people have been participating around. The event happens, and it could be a tremendously busy day the day after the event, and
right,
vols coming way in.
Right. So there's no direct correlation in the sense that it has to go up if there's a lot of volume. It could go in different. It could go down. It could stay the same. It could go up. It depends what the end users and the demand, what they're doing. And part of that is looking at the volumes, looking at how the options and the markets reacted, what happened to the markets afterwards. And when we look at option contracts, we have to look at where they're concentrating the flow, right? And one of the exercises is, okay, we have this volume here. So let's just go back to
Hey, D, we had another question from Mr. Batista. Can I ask that too? Maybe while you're looking at this, it would be helpful.
Sure.
He's saying, Dimitri, I'm curious about the criteria for most active? Is it that based on the net volume at the present day time, or based on relative volume based on several days of trading, much as a volume average?
Yeah, no, thank you for that question. So the, the this table here, okay, allows you to look at it from a couple different perspectives. The default sort, right? So you could sort all these columns. The default sort is the column by total dollar notional of options traded on the day. So this resets in the morning every day and tracks it continuously, cumulatively on the day's trading. So this is looking at Friday's trades. Today, once we, after the market's open, the new trades start flowing in, it's going to reset, right? It's going to reset and start from 0 today, and it will accumulate throughout the day. So this column here only looks at today's or most current trading day. And that's what the auto sort is, the highest. And right now it's set to the highest by dollar notional. You could change that if you want to just look at contracts. You could switch it here. So you could see here, if I switch it by number of contracts, well, SPY traded a lot more contracts. So 1.7 million contracts traded in NVIDIA, SPY traded 7 million. But the difference could be because NVIDIA is a higher priced stock, the option premiums are more expensive, or maybe the contracts that are traded in one versus the other is that, SPY, you could have very tails that trade for a penny or whatever, but those are still contracts. So those are two different ways to look at it: number of contracts versus dollar value paid for those contracts. And we could just resort this if we wanted to. And if we did it by number of contracts, you could see SPY, QQQ, Tesla, and then NVIDIA falls to fourth place. So that's on the day. Here, next to it, we show a relative value. And this is looking at the trading volume on each day for the last 90 days and taking the daily average. So what would be the average daily volume if we just use 90 days? High ones, low ones, if we average them out. So you could sort it by here as well. And what this will tell us is maybe not just on the day, but if we just looked at average daily volume, which one is the most active? So we have the ability to sort it by that column as well. Now, by having these two columns next to each other, we have the current day's volume, the average daily volume. This allows us to make a relative comparison. And the relative comparison is, well, what is the volume today, and how does that compare to its average? And then we could get this ratio. And the ratio, if it's above 1, we take today's versus average, and if it's above 1, it means the volume is above its average daily. If it's below 1, the volume is below its average daily. And it tells us the magnitude. So the higher this number, the more or higher the relative volume is, right? The higher we go, the more volume on a relative basis there is, more unusual. So if let's find we could even sort this by highest. So over here, if I just sort it by relative volume, we could see here's a stock, SRTS, and typically it doesn't see a lot of volume. So this option, the options don't trade that much in this particular stock. Yesterday, or I'm sorry, Friday, there were 2,100 contracts that traded. And that might not be a whole lot of contracts for a particular stock, but it won't be a lot for like something like SPY. But for this particular stock, it is, because we could compare that 60 contracts on average per day is not that much versus 2,000 all of a sudden. So that would be the relative volume. Okay, and that will point something out that, well, we're trading, more than usual. What's going on? What happened there? Did somebody target a specific option? Maybe you could get some more insights. And next to this, here's another breakdown. This tells us the number of trades. So, for example, here we see one trade. And what that means is that there are 375 contracts that traded, but it all happened in one trade, right? That was it. Somebody traded 375 contracts, and that's it. Here we see 3,075 contracts traded, but they were broken up into 106 different trades. So it could be either, it could be lots of trades in different options. It could be lots of trades in the same option, but it didn't happen in one block. Okay, so that's something else to consider, because we could go in there and analyze that, saying, well, what's happening there? And then you get this breakdown by call and put volume. So this tells us here that the concentration of the volume was in the calls, right? 3,069 calls, 6 in the puts, and this gives us the volume, the relative volume in the puts. So you could see that a little bit of it. We didn't put both columns, call percentage and put percentage, because if you just put one, if there's 82% of the volume in the puts, then it's pretty easy to understand the rest of the volume was in the calls, because there's only calls and puts. But it allows you to sort this way too. Okay. Hopefully that helped clarify that last question.
That was very helpful, D. Thank you.
Yep.
And those were two new users, actually, or
okay.
excuse me, two new Chameleon Morning Show participants. So thanks for the questions.
Yeah, definitely. Thank you for the questions. And tomorrow we're going to cover it in more detail, where we actually go in and start analyzing the actual trades. We're going to look at what were the calls that traded, what were the puts that traded, what was it targeting, how did it impact the markets, how are people using those options, are there any opportunities there, and so forth. So that we'll go over that tomorrow. Okay.
And Rob's on. We are what we're going to be seeing tomorrow morning will be different than what we see today, right?
There'll be a new report that you don't have access to right now. So these are new features that we'll be talking about.
Very cool. All right, we got about 5 minutes left. Anything else? Are we good to go?
Yeah, I think the only thing, if we slide down just really quickly, and some of the things we'll be talking about is how do we break down the volume. And here you have a breakdown of just, these are the overall numbers that are trading in aggregate on the exchanges. And you could see here that the single leg trades, if we looked at all the trades that traded on Friday, represented 54% of all the volume. The rest were multi-leg trades and contingent trades. Another thing we're going to be discussing is, well, how do we break it down to get more insights? Well, we could also see where the concentration of that volume is. For example, is it in short dated options? So here you see what percentage of them were in options that expire 5 days or less. Then we have 6 to 10 days, 11 to 30, trying to break them down to see where the concentration is. We also can break them down by the order, size, and type to get a sense of, are these small trades? Do they look like retail size trades, professional size, institutional? So those are another thing we're going to be taking a look at. How are those trades and volume distributed? And then we'll break it down even by calls and puts and the moneyness, right? Where are they concentrating on it? Because you have options that are near or at the monies, near where the strikes are close to the spot price. You could have options that are deep in the money, or you could have options that are wings and out of the money. So those are things that we're going to be discussing in more detail tomorrow on some of these new reports that we're going to be looking at. But well, I'm going to end it right there because we're almost at 9:30.
All right. Excellent job, D. Thanks for the questions, everyone. It was a great show. Great job, D.
Thanks everyone for joining. Stay safe out there. Have a great trading day and hope to see you guys tomorrow.